$6 trillion per turnover per day that's floating around.
You want a
And
piece of that, don't you?
Yeah, so a lot of people think, okay, $6 trillion is floating around. They think, okay, no one controls the financial markets. It's actually controlled. Like, there is major players. Get started. So we're here. Everyone's awake. Yeah.
Yeah.
Early on a Friday.
I had a late one last night. Just couldn't really get to sleep.
Is it? You were thinking too much.
Yeah, I was thinking too much about what I'm gonna say today.
Yeah. No, that's how it is. But I mean, obviously, podcasts. It's all about just sharing your views.
Yeah.
Whatever you have on mind, just feel free share what you want to share. So yeah, guys, let's get into it. Let's have a little introduction. So obviously I'm your host, Omar from Ceniqa, founder and CEO, and we're here just to have a general conversation. And I like that the three of us got together because I feel like we have a lot of similarities.
Yeah.
We have a lot of differences as well, and we can sort of just mix the two and get to know each other a bit more, share with the audience as well what we do, what we're currently up to, what we've been up to, etc. There's a lot of happened over the few years, like. So I'm gonna introduce Jordan. Jordan, when did we first meet? 2015, wasn't it?
Yeah, 2015 times. Seems like yesterday. I know where the time's gone. But you don't remember. That's the funny thing. You don't.
I remember we had trader chat.
You don't remember how we met, so
we had trader chat.
You don't remember how we met? I was like, do you remember how we met? He was like, I was like, my friend Mohammed. He was like, who?
Yeah.
Seems like he had a rough night.
Yeah.
No, it's just during the day. I was my friend because I was interested in like doing trading and stuff.
Yeah.
And I was just having a conversation with my neighbor about it. Just about it. I was interested. I was keen and stuff. I saw what got me into it the glamorous lifestyle you see on the internet. The cliche thing. But then obviously on top of that, I was also keen on just making some money on the side.
Yeah.
So he suggested you.
Okay.
And then Snapchat. I think it was on Snapchat.
Was it Snapchat?
Initially, I'm not sure.
Okay.
You was on Snapchat quite a lot, wasn't you?
Yeah. So I mean, I first got into the financial industry in 2013, and I started off working as a broker. So I was on the sales floor. I was calling up clients, getting them to invest into the brokerage at the time, and the financial markets was really at its infancy. I think the online trading just about started during that time, because before it was all over the phone. I'm not sure if you remember when you used to take trades, you used to call up the broker by the banks, and then they'll physically take a trade for you over the phone.
Wolf of Wall Street style.
Exactly. Like, even before, like
in the films.
Old school New York style.
Yeah.
And London wasn't too big on trading, and then it just started. That's when the online trading started coming in. We just about had MetaTrader.
Yeah.
The new softwares that came out. We had MetaTrader 4 at the time.
I remember MetaTrader.
So yeah, that's where I first started, and then that's when I got myself out into the public, talking about trading, getting clients, etc. And yeah, I remember I was 18. I was working in the financial industry, and I mean that's one of the things that we all have in common, is we all worked in the financial industry.
Yeah.
So for example, yourself, you was in insurance.
Yeah. So I started in insurance back in like 2015. Like similar to the period that I met you in, actually.
Nice.
Working for reinsurance companies in the city.
Yeah. How was that? How was insurance?
Insurance is really good. I mean, the basis of it is like just having coverage basically, but it's just to the extent of what can be covered, which was like interesting to me.
What is insurance like?
Well, it's just basically giving someone peace of mind. So let's say someone wants to buy a car, but in order to have that car, in case there's damages that are going to be incurred, like if you crash your car or damage it there's like third party people that come in and like, mess it up, like, stuff like that.
Yeah.
If there was any damage done and the person cannot pay, then the insurance company provides coverage for it.
Mm-hmm.
So they will then just you then pay a deposit down, we call it like an excess, and then they will cover the rest in the event of an accident.
Yeah. That makes
So
sense.
in the event of that, if you do damage or crash your car, whatever it is, you're then covered. So then you don't have to worry about the cost of paying upfront capital to fix your vehicle, whatever it is that you may have insured.
Yeah.
So ultimately, it will give the person just peace of mind. Just if at an event of an accident. So I think that's how I was taught, because it wasn't about overcomplicating what insurance is. It's very simplified if you just break it down for what it is. But what the industry I worked in was reinsurance, which is slightly trickier. It's like a layer on top of insurance. So it's like it's insurance that's basically being insured. So yeah, it's a weird thing. When I was told that, I was like, what the hell? I was like, what do you mean? Like, insuring insurance? I was like, okay, tell me how that works. So then it was almost like, so if an insurance company wants to like insure, like, let's say something large, like buildings, you know, some big skyscrapers that we see, obviously, believe it or not, they're insured. But if the capital to get that building insured is too much, you then go to bigger, larger firms, reinsurance firms that have larger capitals. And what they do is they don't just like insure on the entirety of the building. They will then create a pool for funds where capital is then put in the pool. And then once every other reinsurer is like chipped in, they can then cover the insurance company that is insuring the building. So
like a collateral. Yeah. That's cool.
So that is basically the basis of, I think, reinsurance. And I worked in that industry for about 6-7 years.
Yeah. Cool. Yeah. And what got you into trading and investing? When did you start trading?
Trading. So I started trading around 2016. I taught myself.
Which broker were you using at the time?
So I was using IG.
Oh yeah.
IG trading. Yeah, I was using IG trading, but I wasn't trading like currencies. I was just trading like stocks and shares.
Okay.
So I'd be interested in that.
Yeah.
And I had a strategy on trading stocks and shares, and I thought that my strategy was like a profitable one. So I taught myself that, and once I taught myself, I saw the results. So I was really happy with that, and there was a bit of excitement, I think, along with it. So it just kind of made me more immersed into trading, and obviously with everything that happens around the world and how it affects the markets, that's like, to me, like an exciting thing to be a part of. You know, it's like a game in a way. You know,
yeah.
when you look at the charts and you're there and your money's going up and it's going down, but like it's a bit of a ride. Very, very risky, but you know, once you apply and learn about risk management, then it can be an enjoyable experience. So.
Yeah, nice. And now, how about yourself? Let's hear about you.
I feel very shy introducing myself
what's
after
your
like this.
I didn't even say hello, my name is. I just went straight.
Same.
So yeah, tell us a bit about yourself. What do you do? And
funnily enough, I've worked with insurers. I work in consulting. I've worked with banks and insurers across the world, different services, stuff like that. As an analyst, I don't have any like professional trading experience either. It's more something that I like to do on the side. I wouldn't even call it trading. I'm more on the investment side. I think we need to make there a difference as well. So I have like a long-term perspective. I'm not checking my accounts every day, making sure like I get a profit here and there. I'm more like, okay, there's a way to make money without actually having to do much. So let me explore that. And yeah, coming from like, I always liked numbers. And I think how I got into it was like, well, it can't be like that. There are people out there who make so much money without really like working so many hours. Like there's something about this, like work smart, not work hard. How does that actually work? And I think because I like numbers, I like understanding how like politics, that's the same thing you just mentioned, like how everything can affect the market, how like all of that gets interconnected, politics, economics, and then just charts going up and down, looking at numbers. I really always found it fascinating. So
Yeah.
I'm a bit like a geek on that, I would say, but it's fun. It's like
Nice.
just
Yeah.
understanding it. It's really good, and because I think it gives you the opportunity, because I think many people, like, I'm really, really passionate about educating people about that, because many people think like, oh, I need to be really rich. I need to have a very massive income in order to make money in the stock market, in Forex and whatever. There are people out there who preaching like, oh, put $300 or pounds or whatever today, tomorrow you'll be a millionaire. That's not true. That doesn't work for everyone. But like making them understand you can just like put £10 each month somewhere, and that
Yeah.
money will work for you,
Definitely. Yeah. Definitely.
and you'll have an impact on the economy as well.
No,
It's
definitely.
just really something that I like about it. It's like democratizing finance in a way,
Yeah. Yeah.
making everyone a bit more equal.
No, it's good. It's good that you mentioned that,
That's
because
interesting.
I feel like a lot of people actually don't focus on that side of trading or investing, the long term. Everyone right now is very focused on quick, get rich quick, get rich quick.
Yeah, it's a lot.
Or
It's
just put a £500 account in and quickly flip it to a couple thousand.
yeah.
It's not really the best way to go ahead. Like if you look over the years, if you look at the indices, for example, an index is a collection of companies. So you have, for example, the S&P 500, which is the top 500 companies in one asset. And if you look at the history, year on year, it's been going up. And if you did follow that strategy of, for example, let's say since 2016, just done £10 a month into the S&P, right now the compound interest you'd have been literally, I don't know exact calculations, but what would you be on now? Like at least 20k, 50k. Do you know what I mean?
Just from
Just from
literally
£10 a
throwing
month.
£10 in.
Literally.
I like that you mentioned like this compound interest point. I think
Yeah, I
that's a
love
very
that.
important point, because people sometimes like it's math or
Yeah,
math. Like
yeah.
people really scared of math. I have a lot of friends who tell me I don't do trading,
Yeah.
investing because I don't like numbers. I'm scared of math. I really suck at that. I'm like, you don't need to be good at it. It's like a very basic like concept.
Yeah.
Think
Yeah, I think maths is like the universal language.
yeah.
Maths is. I think like I'm not good with numbers, but I know that maths is everything.
Yeah, yeah.
Everything equates to mathematics. Like so, the
No,
more you try to
exactly.
like, you don't have to be like Einstein. It's like it's not like trying to figure out algebra or anything like that. You're just trying to just see numbers, see how much you can make from those numbers.
Yeah.
And, you know, stuff like that.
Yeah.
But yeah, I wouldn't say to anyone to be scared.
No.
You just have to, if you're willing to do it and you have the right mindset, then just go for it, you know?
Yeah.
Mindset is super important. Like
Yeah.
people talk a lot about like, oh, you need to understand how to read a chart. You need to understand how everything connects. But I think if you really want to be successful, you need to have the right mindset.
Definitely, yeah.
You need to like understand when something's going down, your life isn't ruined and you made any losses. Like you need to have a bit of resilience and be okay. So I think one of the rules that I tell people when they ask me for advice, I'm like, never put more money into it than you can afford to lose, because there might be always losses. But if you like get into that with that mindset, then and you see like a stock going down or like any other commodity going down, you'll be like a little bit more chill about it, because you think like, okay, I could have it's not great, I could afford to lose that money because I only put as much as I can afford to lose. And B, you need to understand like, oh, I don't go out of like this commodity asset or whatever, so technically I haven't lost anything right now, and it might go up again.
Yeah. No, definitely. It's all about
And
the
not
structure.
panicking. I think a lot of people who don't really have experience in that panic as soon as anything goes down. They're like, oh my god, what to do?
It all boils down to expectations. Like, if you go into trading or investing without structure, without the right strategy, because there's different types of markets, and the market condition, your strategy should adjust each time. Because every year, I don't know about you, but every year I've seen the markets change. Some years are much faster, some years are slower, some years are completely dodged.
Like in terms of like volatility and
Volatility,
stuff.
events, economics, etc. If I compare this year to last year, totally different. Totally compared to the year before that, totally different. We had 2020, 2021 had bullish market across everything.
That was a good time.
From watches, supercars, commodities, crypto, everything was bullish. The year
Yeah.
after that, everything was bearish.
Yeah. Yeah.
And now
What
we've
would
got a
be
bit of a mix. In fact, now it's been sideways. If you look at the charts from January to now, we're at the same level.
so? Would you say then it's just been ranging the whole year?
It's kind
Or
of it's stooped low, it's came back up, and it's gone back down to the middle.
wow.
That's exactly what's
Yeah.
happened this year. And we're
Yeah.
just stuck right now. We're just
Sometimes you
waiting.
look at a short period of time, you see
Mm.
like such a big fluctuation. But if you like in your brokerage account go for 1 year view, you see like, oh, it's like
Yeah.
1-2%
Yeah.
plus minus.
Literally.
Because
Yeah.
you were telling me this a few months ago. I was like, how's your portfolio? And you were like, it's down a bit. But how is it now? I think it should be back up to the
It's
middle, isn't it?
it's like pretty much
Just
where it was at the
ranging.
beginning of the year.
Yeah. Definitely. I mean, what's your academic background? Did you go uni or?
So no, I didn't go to university.
Mm.
I'll be honest with you, I wasn't really keen on just doing the whole educational journey.
Okay. So you're like me because I straight after
Yeah.
college I left college.
Yeah, I
I
don't know
went
what
straight
it
to work.
was. Don't know what it was.
Yeah.
Wasn't interested. I thought I'd be because so I studied sports science
Mm.
because I really enjoyed obviously sports. Like love football. I think I love most sports, but football above all.
Yeah.
And
So do I.
He's a big football fan.
we got to talk.
Wait,
We
who
got
do
to
you
talk.
support? Who do you support?
Spurs.
Oh.
Oh, he's heated.
Don't say Arsenal.
No, I'm
You
not
have to
mentally
leave.
sick.
Who?
No,
No, who's your UK team?
Liverpool, but my
Oh,
German
yeah?
team was even closer to me, Werder Bremen. I don't know if you know them.
Werder Bremen.
Yeah. So I'm not a glory hunter.
They're good. They're good.
Yeah.
They're good.
Yeah. Nice. Good. I kept you on opposite sides there, so there's no beef.
No, it's
Do you know what? Werder Bremen. Where are they now? First.
they're back to first
Bundesliga.
league. They're back to Bundesliga. Yes, they went down for a year. They had a really 2004. Those were the glory years. They kept winning stuff even
Yeah.
in Europe. Now they're back to like somewhere in the middle of like lower middle of the Bundesliga table. It's not been like
Okay.
best times, but I stuck with my teams. Like I'm loyal to my teams.
That's good.
Yeah.
Yeah, you stick to Liverpool. I don't think they're going to do much damage. But sorry, I know.
No, sorry. This is not about football.
Yeah,
Sorry,
Takes
Omar.
over my brain. I'm just like, what football?
Yeah.
Yeah. So I did. So I didn't go to uni. I didn't go to uni. No, I thought I wanted to go when I once visited a university in West London. I think it's Brunel University because they're
Okay.
like one of the best unis to study like sports science and everything around that subject. And I was like, wow, this is amazing, the facilities. And I was loving it. And then we get back and I was like, oh, I'm back in college now. And I was like, oh, dead.
Yeah.
I was like, maybe I was like hoping I'd just get like skip college, go straight to Brunel, but obviously that's not gonna happen. Shit doesn't exist. So so I did an apprenticeship ultimately. I got a few jobs here and there. I wasn't really too sure on my pathway, but then someone suggested to me about doing educational courses in financial services.
Nice. Yeah.
Did some research and then something popped up for me in insurance and then just went with it and then just that's how I kind of started my finance kind of journey.
Apprenticeships are very good, I think.
Yeah.
And especially now, they're emphasizing more on apprenticeships rather than the traditional route.
It's important because
it's more practical.
Yeah, because uni is great for the theoretical side of it. You understand the theory of it, but when you do practical, it can be very like different to the experience that you are from reading the book. When you're practically doing the job, it doesn't just require brains; it requires a bit more. It requires a character, and jobs care more about the characters that they employ. Like, are you the right person for this job? Yeah, you look good academically. Yeah, you have A's went here, but like if you simply cannot gel with our team, let's say for example, like we had a team and there was only like 4 of us, someone else joined and it didn't really fit in and we all noticed that. And they were great academically, but at the end of the day, they didn't stay long because it was almost like, okay, this looks great on paper, but we come in on a Monday and it's like the chemistry is not there, which is
Yeah,
very important
yeah,
for
yeah.
a team to build and to be successful. So
Nice.
that's why apprenticeships deliver on that. Like, and you build character whilst on your course. So you're studying, doing the theory side, and you're doing the practicality of the job.
Mm-hmm.
So the fusion of both is like incredibly important.
No, definitely, yeah. How about yourself, Mana? What's your academic background?
I have a very diverse academic
Yeah.
background. So I did combined study in my undergrad. It was an applied university, which I really appreciated. So it was like languages, management, and economics and politics of the Middle East. And then I wasn't really sure if I want to do business after my undergrad degree.
Mm-hmm.
I was really into like the whole economics development side of things. So I started a degree in political economy of development, but through all of that, I always focused on finance. I then was like, okay, but like I don't really like research, academics, all those things. I'm not really the person for it. So when I finished my degree, I was like, okay, what do I want to do? And I somehow ended up in consulting.
Yeah.
So it was just I think, yeah, very interesting way of doing things.
That's quite cool.
But
Yeah, that's quite diverse.
but it's cool because I got to look into different fields.
Mm-hmm.
So I got to look into economics and politics and how they interfere. But I also saw like that there was a time where I really wanted to work for one big international organization. And I thought like, oh, you can really change the world when you join like the United Nations or anything. But when I studied like all of those different fields, I feel like business and like investing as well has so much more power in the end because like money rules the world in a way.
Yeah.
And like just understanding those basic concepts and how they can impact the overall picture is like something I think I really value by having done a couple of few things.
That's
Nice.
cool.
Yeah, nice.
But I agree to your point around like practicing and like doing an apprenticeship because I think you only learn really what the real world is about when you go out there and you have your first job. So
Yeah.
I think the first 6 months of my job I had such a steep learning curve because I felt like I got so many like also those so-called soft skills that you can't learn from a book, which I
Yeah.
think are very important.
Yeah.
Now, even myself with obviously when I created Ceniqa, it's an online course, but then I also have sometimes members want to do one-to-ones, and then I can see different people, different students have different learning styles. For example, some people are very academic. Just give them a book, and they'll go through it. They'll make notes. They'll highlight, etc. And some people just need to do it practically. You know what I mean? So there are two sides of learning.
Yeah,
And
definitely.
I don't know. I feel like the practical side is much more effective in, let's say, in investing and in trading. I think you just need to practically do it, experience the emotions,
Yeah.
etc.
Yeah.
Understand how to manage your account physically. Because really, when you just look at the theory, it's not enough. Because then, like you said, the mindset comes into it, the psychology comes into it, and you can't really get that feeling from just a book. Yeah, that's definitely,
That's true.
yeah.
I think getting a demo account or something, or just like dabbling into certain things with a little bit of money is what helped me in the beginning.
Yeah.
Because, like, I was like, you know, some backgrounds, like, or some I come from Germany, and Germany is basically a very bank-based economy, so people don't really like put much money into investment accounts, or like it's not the,
Really?
it's rather it's like it's coming more and more. There are people, there's a stock market and everything, but like you're like a bit more risk averse, and if you're risk averse you tend to like not invest that much money. You invest if you invest in like more stable asset classes, bonds, funds, like something where you know, okay, I won't beat the market, I don't necessarily want to beat the market, but I kind of track the market and profit from like overall growth everywhere. So I never really learned it from somewhere, and I was like always told like, oh, this is risky, you can't do that, you'll lose a lot of money, be careful, don't do this, don't do that. And I was like, well, I want to try it. I got curious, so I was like, okay, let me just put a little bit of something somewhere and see how it goes. And then you just get a feeling and a sense for it.
Nice, yeah.
That's good.
And if it's not for you, I think people then can still go out of it and know like, okay, this is not for me.
Is that how you started? You just went in straight into it?
No, I did obviously like read something up on it,
Yeah.
but like I'm more also a learning by doing person. So I was like, okay, the theory is nice, but I really actually have to see what happens.
Yeah. No, because I remember when we first started speaking,
Yeah.
you was on the Zoom calls,
Yeah.
and I think technical analysis was new to you, right? You're more kind of a fundamental
Yeah.
analyst.
Yeah. Yeah. So I knew obviously there are patterns, and it's really cool that you can look at a chart and you can draw lines in it, and you can like look very close and have like all those different type of charts. And
Yeah.
it might be overwhelming at the beginning because there are like so many like Bollinger Bands, however all those stuff is called. And I was like, wow, I didn't know about that. But I don't necessarily think you need to know everything about it.
No.
You just need to understand there are patterns, and you need to keep like some basic concepts in your mind, and then understanding that it's not only supply and demand that is affecting how something is evolving, or like it's supply and demand, but supply and demand is depending on a lot of other different things.
Yeah.
Yeah, no, I get that. Yeah.
How about yourself? How do you trade? Are you currently trading, or what's the situation?
I'm not trading right now. Did in the past, obviously. I did the currencies, was trading on the currency markets, went into crypto, excitement of it. But I think from my experience of learning how to trade, literally going on YouTube, just understanding what support and resistance is, you know, what MACD lines are, moving day averages, all these little things. There's so many tools to use, and really and truly, you're right. You're not meant to learn. You can if you want, if you really really want to, but don't have to learn all the tools. You got to learn what's good for you. Like, every trader has their own strategy. Therefore, every trader may be different from another too. So, I guess from my experiences, I was like winning on trades, doing well, but then the aspect of like the psychology part, which I wasn't trained on, hit me, and it hit me hard because I started making money, and then I see the account go up. I'm excited, and I'm like, okay,
Take more risk.
take more risk, Jay. Take more risk. You could make this much in this one trade, and I'm just like, oh, do it. Like, I've set the target. Like, the market's gonna do it for me, but really and truly, it's slapped me in the face, really.
Yeah.
And playing with leverage is not cool. So yeah, I was over leveraged, greedy. Ended up just having my account blown up, basically. So that was that was my experience after that.
That
But
makes sense. Yeah.
it's never made me scared from like trading. It's just made me more aware of what I need to work on.
Yeah. Yeah.
If I worked on certain things and I knew now that I could apply back then, I probably would have still had my account there.
A lot of people don't talk about actually losing in trading. So
Ridiculous.
for example, it's part of the game. Like,
Yeah.
you will make losses sometimes, but trick is don't lose a lot more than when you make.
Exactly.
When you make profit, make sure it's more than you lose.
Yeah.
And your account keeps growing.
Yeah.
It's all about management, risk management.
Yeah, I think I just had the idea that I was going to be winning.
But
Really,
I feel you need to be flexible with trading, because money's there to be made. It's $6 trillion per turnover per day that's floating around.
you want a piece of that, don't you?
Yeah, so a lot of people think, okay, $6 trillion is floating around. They think, okay, no one controls the financial markets. It's actually controlled. Like, there is major players at the top of the banking industry
Big time.
that buy both sides of the position. They buy and sell. I'm not sure, because did you study banking and finance, or did you have any modules
I did,
in banking
yeah.
and finance? And how about you? Did you study?
No, I didn't do banking. Mine's just more solely about insurance.
Because in finance, there's two sides. There's always the borrower and the lender. You get essentially what that means is there's a buyer and there's a seller.
Yeah.
Right. So there's always two sides, and there's a hierarchy. So at the bottom you got the retail investors. After that you've got like hedge funds, wealth management, pensions, etc. Then you've got banks, and then above banks you've actually got the intermediate banks. So there's a bank for the banks.
Oh, really? Like,
Yeah.
can you give me an example?
The companies, they're not very out there. They're not really out there,
Oh,
but
but they hold a lot of capital.
yeah, they manage the LIBOR rates,
I
the
think,
interest rates.
yeah, I
Yeah,
think so. Generally,
like the
the financial
clearinghouses.
system is based on very basic concepts, but like with all those derivatives and one bigger than the other, it's like it's become a very complex construct,
Yeah,
and that is like dependent on each other, and like there are intermediaries for at every different stage. So there's nowhere where like, or rarely that like two really interact with each other,
yeah,
and it's
yeah.
only just those things.
No,
But
definitely.
Okay.
yeah,
So the interbank broker, the
yeah,
IDB, they're above the mainstream banks. So you've
So
got
like
Barclays,
it's
really.
HSBC, and their orders go into the intermediate bank, and the intermediate bank just buys and takes every order. They take both sides
Wow.
to get it, and they're the ones that have to make the market. So they're also called a market maker.
yeah,
Oh yeah.
So they make the market. They make sure the market is equal, etc. And then if they need to do certain transactions, if they need to move the market down or if they need to move the market up, they have all the liquidity. And
Yeah.
above them is the central bank. Central bank really is a regulatory
Are we talking
yeah.
about
entity in it, like the
like
Bank of England, the Federal Reserve. These are the central banks.
They said like
The
the
ECB.
rates for which the
Yeah, yeah,
intermediaries like actually
yeah.
so
trading with each other.
the central so like the banks that basically are we talking about the banks that produce money like
So when we talk about
the
banks like HSBC, Barclays, Goldman Sachs, JP Morgan, etc., Citi, there's two sides to banking. There's the retail side where they take deposits, they do mortgages, loans, etc. And then there's the investment banking side where they use that money they've got from the retail, they use that money to actually trade. So when you go to a bank and put money into a savings account, although you're getting 1 or 2%, they're using that money to make 5, 10, 20%
oh, really so
per
leveraging on what the
per month. Yeah,
retailer invests in.
I mean,
yeah,
you probably know it from insurances as well. Like whatever someone pays in a premium just isn't with you, right? It's going to be invested somewhere else as well in order to make sure like there's money growing and growing some profits. So it's similar to what
Yeah.
banks are doing as well.
Yeah, obviously with the insurance side
It's a bit different because it's a different product, obviously, but like,
it's all risk-based
yeah,
insurance.
yeah,
How risky is this asset that they want to cover? They want to look at all aspects around it, and the key is with the underwriters, especially if they notice that there's a risk that they can make money on, which is essentially risk that will be, I don't know, like basically a risk that will never incur, that could rarely incur a loss. I think underwriters are good at that, so they check in, and I
yeah,
think that's how the insurance companies can. I think that's how they stay profitable as well. The top insurance firms, good risk management and good
yeah,
assessment of the risk. Definitely.
yeah, yeah. And I mean that's
So
the point.
different though to banking. It's just
it's very
Yeah,
different. Yeah,
that's the point I was gonna say is in a $6 trillion per day industry, do you think $6 trillion is just floating around and no one is controlling it? Of course not. If there's that much money, there is someone
that's a lot of
controlling,
money.
not someone, but entities, essentially banks,
Of course.
market makers, governments, etc. They have to make sure it's profitable.
Yeah, because I'm assuming obviously with trillions and trillions in the market, just having a small percentage of that.
Mm, yeah.
You know what I mean? Like,
I mean, if we had every single retail trader on earth, now a retail trader is someone that trades for themselves as an individual. It doesn't matter if you're President Joe Biden, if you trade your own account, you're a retail trader. If myself, I trade my account, I'm a retail trader.
okay.
If my auntie or grandma trades their own account, they call a retail trader. If every single retail trader on earth was to do the same trade, was to buy
Mm.
an asset, how many pips, how many points do you think the asset would move? Because if everyone buys something, there's a huge amount of demand, right?
Yeah.
What change would happen in the market? Let me ask you guys that. What do you think
With everyone bought,
if the whole world, the whole industry of retail traders done one same trade?
well, would it
the
not
How
just
much?
active ones or like if
Everyone.
the whole world population.
Yeah. If they all done the same trade, how much would the market move by? What would you see on the screen?
I don't think it would be like that much of a change, because even though it's like a big number of people, it depends also on how much
Yeah.
leverage they have, right?
Yeah.
And because they're like small, but like a group of small people, they will never have as much leverage as like institutional traders
Mm-hmm.
who are like in the game. So I think there's still some inequality, but like if those will like constantly keep doing that, putting more money in there, like becoming more active, then it could become more equal. Like I think you can make it like more democratic if you get
Okay.
everyone getting
Yeah.
in there, but I think it wouldn't move that much in the start.
What do you think?
Do you know what, when you say that, yeah, it reminds me of when do you know GameStop?
Yeah.
Yeah.
Where investors were actually battling against
Yeah.
the corporations,
Yeah.
and they were winning because everyone like collectively like worked together and they actually beat the hedge funds and stuff. And
Yeah.
the corporations were like just basically getting just rinsed completely.
Yeah. Yeah.
So
But eventually it was one hedge
I
breaking it all down, right? In a way. So even though
so. I
those
can't remember
people were
fully.
really pushing it up,
Yeah.
it was like then everyone like knowing, okay, it's pretty much full of shit, and people are just buying it because they think it's good. Someone told them it's good, and then the big players came in again, and they weren't able to like reverse it and make still profit out of it.
I mean, the GameStop situation, it was for individual stock, but I'm talking about if collectively everyone was to trade on for example, the Forex market. The Forex market is the largest market compared to the stock market.
Yeah. So there's more inflow of money, I guess.
Because the Forex market is where the interbanks trade.
Yeah.
The stock market is not as big. It's actually it's more regulated, but it's actually more on a share by share basis of the company ownership. You know what I mean?
Do you know what? I don't think it would move much. Personally, I don't think it would move much. I feel like maybe I think that would lose money.
It was calculated, and
that's just me, innit? I don't know. Could be wrong.
They actually calculated the amount by estimates. Every single retail trader, they were all to do the same trade in a Forex market. You only move 10 pips. Yeah. So now the market makers are able to move in a single move 25 pips. How much liquidity do they have in a minute? They could push a button and they'll release liquidity.
I don't know, trillions of liquidity.
Trillions, yeah. Exactly. So then the question lies is, can you really outperform the market? Can you play better than the banks? The answer is no.
You can never play against them.
You can't out-analyze by looking at the charts. Because anyway, analysis is another thing. Technical analysis is another concept. Some people actually feel like it's not always right. There's strategies which work sometimes they don't work. But at the end of the day, what does work is the banks are going to move the market, and your best bet is to follow what the banks do.
Yeah.
And identify their move and just follow behind them. Don't try and
beat them.
Advance, yeah.
If you can't beat them, join them.
That's exactly.
Yeah.
Can't beat them, join them.
Yeah, follow the money. Because they're essentially the smart money, right?
Yeah. They call it smart money.
And the investors are the dumb money. Like, that's
retail.
What they said retail
Traders,
investors, sorry.
Hey, you're going to offend me, bro. Dumb money.
He was scared I was going to take him apart. No, you do.
What?
She told me she was going to debate me.
Debate about what?
Because she's long-term trader.
Yeah.
She's an investor, isn't
So you're going to debate against Omar today about the...
Well, no, I told him I'm not going to be kind to him.
She let me off today.
Yeah.
Oh.
We did that in private.
Yeah.
No, just the way she sat up with it, she was like ready to go.
Yeah.
Like, let's pick a fight.
Gloves are there. She's gonna put them on. Start
we should do that.
Put the seat.
We should do that, innit?
What, like
financial boxing? Yeah.
Ceniqa boxing, yeah.
Ceniqa boxing.
Sponsored by Ceniqa.
Yeah. Well, no, definitely.
Oh my god.
Nah.
So with the Seneca strategy, I always told my members that, look, the way we trade is we look at the charts, we try and identify what the banks are doing,
Yeah.
and then once you've found that move, you can follow behind when the real move comes in. Because the banks will influence a certain people to a direction. Remember, they're playing both sides, right? They'll influence the majority in a certain direction, and then when enough people are in that direction, they'll flip the table and then take the profit
Is
in the
this
real direction.
sorry, is this like the case where like you go on the news and you see you go on the news and it says, oh, someone of a corporation speaks bad about an asset, for instance. I don't know, like this won't. Do you know what I mean? Like they say
No,
something.
definitely, yeah.
They say something like, let's say something like Bitcoin. They say, oh, this is a pointless asset class, but like behind the scenes, they're all loading up money just so Bitcoin can crash and then they can buy, and then
Yeah,
they send that narrative of like this isn't what you need. You know what I mean? Like in your portfolio, blah blah blah. But behind the scenes, they're doing the complete opposite.
yeah. No, definitely.
I think, yeah, I think that's a really interesting point because you know what, like markets. I'm a true believer that markets are very efficient work, so they would work very efficiently, and they're really good to like find a real price of something with like the demand and supply curve. But knowledge, like there's something called externalities in economic theory that impact a price of something which isn't solidly like explained through the demand and supply curve. And knowing more than others about a certain thing will always give you more advantage because you can always influence with knowledge, information that you have, your own outcome and how something will develop over the long run.
Okay.
I wouldn't. I feel like it sounds all like as if we're conspiring against something here at
No,
the
no,
moment, which I think
definitely. I know
isn't
what you
really the
mean.
case. It's just part of how things work, right? So
Yeah.
you need to understand that you're alone are still a small player in like a very big, let's call it game. But it doesn't really mean that you will always lose and just be on the on the shorter side of wins. Like you can still do very good for yourself, but like you need to understand that there are like higher powers who have more influence on how things work.
Definitely.
Yeah, yeah. I mean, on the point you said about the news, etc., I'll give you an example. And it's quite on the same terms as what you're saying. So this was in Brexit. 20 When was Brexit? 2016, right?
Yeah. Yeah.
Brexit was 2016. I think it was June 25th, something like that, if I remember correctly. I was actually trading the Brexit, and I done my analysis, etc. But then one thing that occurred on the news and then gave me the certainty to make the trade was when David Beckham came on the news. And he was like,
When did
no,
he
we're
come
not
on
going
the
to have
news?
Brexit.
What?
He's
He
like,
came on the news and said
yeah,
that?
yeah, yeah. He's like, we're not going to do Brexit, etc. Like they were really pushing that Brexit was not going to happen. And then
David
on the
Beckham.
run up to Brexit, everyone was a bit anxious. They were like, oh, is Brexit going to happen? Yes or no? I remember the morning that they announced the result. And it was like, yeah, Brexit won. Everyone was heartbroken. But
Yeah.
actually, I took a trade on Brexit winning.
Oh, I
Did you
see.
get it?
Yeah.
So
Yeah.
that was
Yeah.
actually one of my biggest trades. I turned 10K to 100, etc., pushing a narrative. It gave me the confidence to say, okay, this doesn't sound right.
Yeah.
Let me go against it.
David Beckham's fault.
Oh, yeah.
You should thank him.
Golden balls.
But it still happens till today. It still happens till today. I'm trying to think of another example.
Oh, that still definitely
Trump.
happens.
When Trump won the election, everyone was thinking, oh, it's going to drop. Market went up. The dollar went up for the whole year.
Yeah. Sorry to butt in, but someone made a bet because when the elections were happening between who was it, Trump against
Hillary.
Hillary, and everyone was saying Hillary. How can it be Trump? I think like someone just thought, F it, let me go on Trump. This is controversial.
Just so random. Yeah.
He had this gut feeling.
Sometimes you even like if you listen to all those people who give you trading advice or investment advice. They always tell you to look what analysts say and do the
And the
opposite.
opposite, yeah. I mean, some of these Twitter tweets,
I think it's not always right to do, but I
not
think
always
there's
right,
some
but
truth to it. To
yeah,
just like, if you obviously, if you take a bet against what everyone else is doing, so swimming against the stream, then if it works out for you, it works out well. It's like betting on a horse, right? I'm not saying like that stock markets trading should be like betting, but if you like, everyone's like betting on the quickest horse, and you say like, oh no, I think this horse is going to surprise everyone today, and you take it and they win, then the odds are like much more on your side, so you'll make much more money out of it, right? I think that's what it is sometimes, but it isn't all, it shouldn't be always like that, because I'm I don't consider the stock market and trading to be gambling. I think there's some real fundamental things and mechanisms working behind it. So there's always risk because you never know what's going to happen. And coming back to your point about like no one talks about losses, you did what you thought at that point when you entered that trade was your best knowledge. So you did the best decision you could take for yourself at that moment. No one really knows what's going to happen in the next 5 minutes, especially right now with like so much uncertainty in the world, like wars happening everywhere. Like you literally sit on the edge. But like you did what you thought might be happening at that point. And if you make a loss, that's okay. You need to be okay with it because you will always need to remind yourself, okay, I thought this is going to happen. It didn't happen. If it happened, like in your case, great. You made a lot of money and it worked out for you. But it wasn't like only luck. It wasn't only like doing like your technical analysis or your fundamental analysis. It was a combination of different things and they all work together in that part. And I think that's what you need to be aware of.
Yeah, I just reminded me of my way of when I was trading stocks, and my strategy around that, because like you said, not really a gamble if you're clued up enough about things. Like, so I decided to clear myself up on like when to buy stocks before they would release their earnings, and then I would look at the company, I'll check how they're performing. I'll check last year's performance and the year before that. So I'm looking at past performances because that gives you like an evaluation of what they're heading into. You're seeing a bunch of losses, and you see that and then you see in the news expected to have even more losses, then I'd short it. But if I'm hearing more positivity, like for example, I traded before. What did I do? I did IPOs and I did like earning calls, and I did one for Snapchat, and this was back in 2016. I must have just been doing my research about Snapchat.
When they IPO'd.
Yeah.
Yeah.
And I had a lot of positive news about it. I just put some money in. I think this was on IG, I think. And prior to it being like released, put money in beforehand. And then just rocketed, and I was like, oh my god. I was like, I made £500.
Yeah, nice.
I was telling everyone, I was like, I'm gonna make it.
Yeah.
Yeah, it was ridiculous. So I was like, wow. So my theory came to life basically. I wasn't like going to mentors or anything. I just was using my brain and thinking about how am I gonna be profitable in this situation here.
Yeah.
Do you know what I mean?
Yeah.
Trying to think of that aspect of it.
I think if you understand some basic concepts, you just need to apply like logic and you can be successful.
Yeah.
Yeah, it's not rocket science. It's really simplified. You ain't got to overcomplicate it. Got to be black and white, you know?
I mean, the most basic concept is like buy low, sell high. And that's not something you need to go and study for, right?
Just when to buy, when to sell. That's the key.
That's the key. But like if you understand that and you don't get into this trap of like always selling when something's going down, obviously there's like entry points analysis, exit points analysis, when is the right one, when is the wrong one. I think but that's something you'll get right with experience.
And that's where I disagree with a lot of traders. They think they can analyze the charts and use a strategy, But like I mentioned earlier, at the end of the day, if the majority are on one side, the banks are going to make the market go the other way.
Yeah.
So you need to just follow what the banks do.
Yeah.
That's my theory.
How do you
That's
know?
always
How do you
helped.
follow the banks
And
though?
that's when you can follow the banks by understanding what the banks do. And this is, I feel, why I'm successful personally, because I learned, my mentor was a trader at Goldman Sachs, and he
Okay.
told me the banks come online at a certain time. They communicate with other banks from Asia. They have gap times, etc. They communicate with the banks in America. They tell them, yeah, this is what I'm dealing with at the moment. Before they pass it on to the next bank, they'll tell them, okay, today I've done this. This is a bank trader. Today I've done this. This is the orders we have right now. This is the orders on the other side. Here you go. And they give them the data. And then the new bank will analyze that data and he'll play that session. And then he'll trade his session, he'll make his money, his bonuses. And then when it comes to Asia, he'll do the same. He'll pass it on the data onto Asia. The Asian market, the Asian market have a very specific role overnight because there's not a lot of liquidity because America's offline, Europe's offline. So the Asian guy, the Asian market, all he does is just clear the board. Just goes up, back down, back to the middle. That's it.
Okay. Oh right,
If you look at
interesting.
that every night, market doesn't move much in Asia. Coming into the UK session, you'll
Yeah.
look at the data from Asia. Okay, oh yeah, you cleared the board, excellent. Let me start the trades. So
Okay.
really,
Yeah.
if you know what the banks do, you just follow behind them.
Okay. It's
And
good that like you know as well, especially like firsthand. So I've never known that. That's the first time I've known this.
the
So
same thing week after week, month after month, year after year, same thing. Everything's the same.
oh,
I could show you data this whole year, last year, like 5 years ago. It's the same. It's all the same. Like, but people don't realize that they get too stuck in a technical analysis, playing patterns, and it's all fun. You sound technical, but really, it happens. Your trade might happen sometimes. Sometimes it doesn't happen.
yeah,
What's the explanation?
mm,
But don't get
that's
wrong,
true.
I lose trades. It's not like I make money every single time. Sometimes you lose trades. This is simply because the market, either the move happened and you missed it, or the move didn't happen because not enough people were on the right side and it was a bit messy and you just make a loss. Does that make sense?
That makes sense.
Yeah,
Yeah.
that's how I trade
Makes sense.
really.
Okay.
Yeah.
Interesting. That's
But I've
cool.
always been on the theory of just follow what the banks do. Read the charts, look at the charts to identify what the banks are trying to do, what they're trying to influence, and then get the entry. So there is a lot of technical stuff to read, but then you find the entry, you find the confirmation, and then that's that real move. In a single day, there's only one real move. It's gonna go up or down. That's it. Yeah,
I think that's more crucial for trading. When you do trading, then you really need
that's
to.
very short term
Yeah.
intraday. Yeah, 'cause
Yeah.
my trades last about 2 3 hours, and I'm done for the day.
How many trades would you execute?
One or two a day. Yeah, one or two a day, and then that's when you can actually, when you've really got it down to a T, that 1 2 trades can make your monthly salary in a day. Yeah, so you can make it. Depends how you wanna,
Yeah.
and it depends on your focus and your psychology. That's when the difficulty comes. Not getting overexcited, sticking to a plan. Because when you make a £500 or £1,000 in a day, it's good. Like it's really, really good. You're top 1%. But then you sometimes become desensitized and you want to make 5,000, 10,000 a day. That's when you need to stop, calm yourself down, and then look for the ideal equilibrium for this account balance. For example, for 100K, a 100K account, you make 2K in a day, that's excellent. Excellent. And then what does
Amazing.
it boil down to? The numbers I found is I like to make 0.5 to 2% a day. If I hit 0.5 and I struggle to make 0.5, I'll stop for that day. If I hit 1%, excellent, I'm stopped for the day. If I hit 2%, I've overachieved and I'm done for the day. I might even take the next day off. Did you see?
Makes sense.
Yeah.
That's my personal equilibrium. Some people want to go for more numbers, but then
Yeah.
that's when you over trade, over leverage.
I mean, if you really if you really just hit your targets, whether it's in a day or in a week,
Mm.
you still hit your target.
Some people will hit their targets and they've done really well, and then they're still trading,
Yeah.
and then they end up losing that money and more.
Yeah.
And then they get upset, and then they lose more. And
So
then
what's the term for that? Over trading,
yeah, over leveraging, over
Yeah.
just emotions, just all emotions.
emotional
Yeah,
trading.
yeah. Or then they go into a negative. I don't like
You need to
holding
be
trades.
really emotionally detached if you want to be good at
Yeah,
that.
definitely, definitely.
Money and emotions are also very much tied together
Yeah.
too.
That's the
But you
thing.
need to learn to separate them.
That's the thing. Yeah, that's the thing.
I mean, I'm trying to do that. I'm gonna learn how to detach myself still from um
Yeah,
emotionally
yeah,
being tied into investment trades and stuff. So um yeah, I'm hoping I should I don't know, I'll find a way to learn and become a better trader in the future. Yes.
I mean, I think for me, I had situations where I was upset or met with myself where I thought, like, oh my God, this was stupid. Why did I do that? But I try not to beat up myself too much on them. So I once bought a share and I bought it like when they went IPO.
hmm
And like normally when things go IPO, like they skyrocket. So and I bought like before the peak happened, but I missed the peak and I missed the news because I didn't monitor it closely enough that it really went like it lost like 80% or
yeah,
something like
Really?
yeah.
that. I was I was glad that I follow my number one rule: don't put more money than you can afford. So I just bought a little bit into it because I thought like, okay, let me buy into it, let me see how it works. So it was like supposed to work the same way as Tesla did. So that's what everyone was telling me. And my brother really like was like, oh, this is a great company. It's like a car company with environmental like EVs and
What was the company, if you don't mind me
Rivian.
asking?
Oh, Rivian,
Yeah.
Oh, Rivian.
the
Oh.
Chinese.
No, they're US.
Oh, US.
Those
Okay.
EV trucks.
Yeah, yeah.
Yeah. So
Rivian.
I
Oh, yeah,
so my brother always told me like, oh, this is a solid company, and he has really knowledge on that field, or he reads a lot about that. And I normally don't invest in anything that I'm not too familiar with, and I did this mistake there because I was like, okay, someone told me I'm doing this, so I bought it. It went up in like a, a few hours. It went up like, I don't know, quite a lot. I won't put a number out here because I'm not sure about it. But then it went super, super down because I didn't buy it at the IPO straight price, which probably would have like kind of equalized my losses. But because I bought it when it was peaking and I missed to go out at the right
Yeah,
point.
yeah,
And then it just like went down, down, down,
yeah.
down, down. And it ended up at a price where it's probably reflecting the value of the
Oh,
company
yeah.
actually, which I didn't do my analysis on. I made quite a lot of losses there because at some point I was just like, okay, I need to go out here now because this is just either staying the same way or staying down, and I don't see it going up anytime soon. So it doesn't really make sense for me to like
Yeah.
lose everything. So let me take my loss and get out there. And it made me really mad at that point because I was like, oh, this was so stupid. But I took a step back and I reflected on it and I was like, okay, what did I do wrong in this situation? Let me evaluate on what I'm doing wrong and let me not repeat this mistake again. And then now I know better. I know like, okay, when I know
Yeah.
a company is going IPO and I want to really buy it, I either really focus on what I'm doing. So taking more trading approach that day, I buy it when it really goes in, I sell it when it's high, and then I wait until it drops down to a normal level again. I take my wins of like taking advantage of this like peak and put it in at that point again and buy like more shares from
Yeah.
that money and let it grow over time. Or I wait until the drop happens if I don't know when it went IPO and buy it at a like normalized price.
Yeah. Yeah.
Because there's a lot of like around those IPOs, like they're institutional investors before, like you're only trading in the secondary market. You're not really trading in a primary market when you're going through your brokerage, right? So
Yeah.
everyone who actually holds shares makes sure that they get a lot of profit. Not everyone wants to hold the shares they initially own by that company when it goes into the public stock market.
Yeah.
So what they're trying is like they're trying to push it up, take their wins, go out, and then obviously it will drop. That's again the same thing as you were saying about like the power of like people holding more stocks having more money in the
Mhm.
game, whereas you being alone, probably just buying one share or like 10 or whatever.
Yeah.
So I
Yeah.
think you just need to learn
No, definitely.
dealing with it. And
Yeah.
I just like feel like, okay, no one's going to give me my money back, so why should I
Yeah.
be like angry and sad? Like the only person I can be angry and mad about myself, but I can also say like, okay, this was not cool. I probably won't do it again. Next time I
Yeah.
know better, and
Yeah.
I haven't done the same mistake ever since.
That's the thing with trading, the emotion aspect. I think sometimes if you start off, the emotions are very high, but as you build a buffer, as you make profit, that money you've made, you're less emotional to
Yeah.
lose because you've made it from the markets. It's not like you've made it from working, spent hours at your job, and now
Yeah.
you've put in that money
Yeah.
to trade and then you've lost it. When you first start off, that money is the most emotional amount you're going to put in. But as you build it up and you create a buffer, then you can start increasing your risk, etc. But like all these challenges that you've mentioned is one of the reasons why I've started the automated trading.
Oh
Now,
yeah.
I've told you guys both about automated trading.
Yeah.
So let me just share with our audience what it is.
Yeah.
Now, automated trading is where I've identified that not everyone has the time to spend actually trading at the right time, nor do they have maybe the right information or the knowledge to make the right trades. And even after all of that, sometimes it's also a bit too emotional, and some people just don't have the right mindset or the patience to trade. So why don't you leave the trading to a professional? And rather than you trading your account, you just connect it to Ceniqa's account, and then we copy our trades onto your account. So whatever trade I make will automatically go onto your accounts. You know what I mean?
Yeah, I know what you mean. So I've got a question around that.
Yeah.
So when so when you make your trade, sorry, what system or what application or tool is it that you use that then allows the client to also automatically lock in the trade too?
Yeah. So how it works is you create your account. You
Yeah.
create your own trading account with a partner broker.
Yeah.
You then fund your account, and then on my side, I have the system, a bespoke system which we've built. We've spent thousands into the development of it, and then we just connect your account by using, for example, your account details. We just plug it in, and then automatically, as soon as I press a button, it goes into your account as well.
Oh, I
The
see.
trade goes straight. It's all algorithms and coding.
So it's kind of like AI in a sense, a bit.
Very techy.
Some people call it AI. I try
Or,
to
I don't
avoid
know.
calling it AI because it's manually managed. It's not an AI
But it's automatically
copied. Yeah.
and you're not physically pressing buy and sell. It's just doing it whilst you're
I'm
just.
taking care of my
Is
account.
that what it is?
Yeah. So because I trade every day, I'm a full-time trader. Whatever I do, it's gonna come onto your account automatically. And
Interesting.
if
How about fees? Because I think that's a big
fees,
question
yeah,
like that.
So everyone
So
asks
I
you.
mean, there's like a lot of where you sometimes think like, oh, or like a lot of companies, even in the investment space, or like you give it to someone and someone's taking care of your money, but you normally pay a percentage rate to that person, and the
Yeah.
more money you give to them, even though they're more experienced, you might sometimes like not even make a lot of profit
Yeah.
because you have to pay a fee. How about that one?
That's a
Because I
good
mean,
point. Yeah, that's definitely a good point.
obviously you're the brains behind it, right? But like people need to be aware if someone's doing kind of their job
No, definitely.
for
definitely.
them, that there's like they won't get the same amount of money if they would get if they would do something themselves. There's
Yeah.
always like some transactional fees somewhere hidden.
No, definitely.
So I think that's some people really think they made money, but
then
they
there's
forget about the
fees,
fees.
Definitely, it
You
makes
always
sense.
read your terms and conditions.
Yeah,
Yes.
yeah.
Exactly.
So I mean, in terms of the fees, what the structure I've got right now is for the next 3 months, between now and the end of the year, I'm actually just building up the community.
Yeah.
Right now, we have about 200 people using the system, and my personal target is when I build a community of 500 automated traders where their money is working for them. It's hands free, and between now and the end of the year, it's completely free. There's no fees attached.
Interesting.
Now, the reason why I'm doing this is because when we come into 2024 in January, I will be introducing a monthly subscription. So there will be a monthly membership of £49, and as long as the account is making more than £49 a month and it's paying itself,
Covered.
then it makes sense that you
Yeah.
continue. But you're definitely right.
Yeah.
If for example, in a month you made £49 and then you got to pay the fee, then really you're net zero.
Yeah.
So that's when it comes down. It also boils down to your account size. If you have a larger account size, you're going to make more. Does that make sense?
I think that's the good thing about like monthly fees as opposed to percentage rates.
And it's a fixed fee, not a
Yeah.
percentage. Yeah.
Yeah.
I'll keep it as a fixed fee.
Because I think a lot of people who are like, I'm not talking about like, let's call it normal people who just put a little bit of money somewhere, but a lot of people who actually have a personal wealth manager pay them sometimes a percentage rate, and it would be much more beneficial
Yeah.
for them to pay them an hourly wage of
Exactly.
like
Yeah.
a lot more than someone else would get as an hourly wage. But because percentages are can sometimes look good or
Yeah.
better than a fixed fee,
Yeah.
but you always have to put it into relation.
No, definitely.
Yeah.
No, definitely.
True. Yeah. It's very creative. Obviously, innovation in itself. So like AI and how they're using AI to implement it in patterns and algorithms
Yeah.
on trading applications, and how AI is essentially trading bot. Sorry, should I say, is essentially trading for the user, which obviously shortcuts the time for looking, especially if you have a busy day, hands free.
Yeah. Yeah.
Obviously, it's not exactly the idea that you have, but it's very similar.
Yeah. Yeah.
Which is a great idea, I think.
So the AI route, the thing I don't like about the AI is just a set of codes. It's a set of instructions. If A, B, C happens, then do D. Do you get it?
Yeah.
Very, very linear. And like I mentioned before, the market is not linear. It's if this much people are buying, we're gonna sell. If this much people are selling, we're gonna buy. So anything can happen. Just
Yeah.
depends on what side of the seesaw it's more heavier than the other. Does that
Yeah.
make sense? And that's why I don't do the AI. We've tried the AI before. It doesn't work.
Okay,
Doesn't work.
really?
Yeah, the market's too interactive. It's very liquid, fluid. The market just depends. If there's this much people on this side of the room, we're gonna take it to that side of the room. If
I
there's this much
see.
people on that side of the room, we're gonna do this. So you can't always predict that until it happens, and then when it does happen, you just follow through.
But I know what you're doing is obviously not AI at all. Obviously, it's
Completely manual.
But you are the intelligence.
Yeah,
If
it's
you-
completely
if you
manual.
s-
Yeah.
And if you look at it from, let's say I'm using your application, I can think, okay, this is similar to AI, but it's not. This is like real intelligence. It's not artificial.
Yeah, yeah.
And it's doing it for you. But I
Yeah.
get the difference.
Yeah,
It's
yeah.
like there's a correlation, but there's still a difference
Yeah.
in a sense.
Yeah, yeah.
So that's why it's very interesting. It's very interesting.
All right, guys. So thank you for coming down.
Thank you.
How did you find the studio? What do you think of the new studio?
I think it looks amazing.
Yeah.
Yeah. So I love the color as well. Like it's
Yeah.
nice and bright.
So
nice
yeah,
and
definitely
sleek.
we'll be doing more podcasts in the future. And
The couch is very comfy.
yeah, it's comfy. Yeah, yeah.
Yeah, I could fall asleep on this couch.
But I wanted to end off our podcast talking about just where we're planning to go ahead, because we're coming into the new year now, 2024.
Christmas.
And I don't know how your years have been, but I feel like a lot of people this year have actually been kind of in a negative surrounding, with the cost of living being so high, etc. And they're looking for new streams of income, or they just want to change. Like you mentioned yourself, you want to become more entrepreneurial, start your own businesses, and
Yeah.
that's really where everything's headed right now in today's world. Like in the digital age, everything's going online. And again, that's why I've introduced automated trading, just as an option for people to have their money working for them. But at the same time, I'm also trying to build a community of like-minded people who want to be entrepreneurial and really step up into today's world. So let's start off with yourself. What's your plans coming into 2024? What are you looking to achieve? What's your goals?
Well, my plan is to obviously get my trading account up and running, start trading again, get into that world again. Obviously invest more money into things like indexes and index funds and you know, S&P. You know, like I want to invest in assets that are like constantly performing. I think that's a good route to take, and as well as that, on top of that, just my main entrepreneurial journey of like running a business, and you know, that is the main goal here for me personally. Start the business, get it running, and see where it takes me. You know, it's a bit of a smoky journey, but it's a journey that I'm willing to put myself into just to see, because you know, I go online and I'm just seeing these kids, literally they're just kids, and they're like, oh yeah, I make
NFTs.
I make $1 million in a month, and I'm like, and I'm here like I'm scrapping away, getting literally like less than 1% of this. And I'm like, how am I able? I know I'm just as good as these people, but they just did it. So why can't I? You know, I always say to myself, why can't I do that? Why can't I be like, I don't say I want to be like that person, but why can't I do something similar and turn it into something, you know?
No, definitely, yeah. And you can.
It's that scared mindset that I've just completely just like flipped on it and thought, no, be ambitious. Be willing to just see where it takes you. Even if you might take L's, you know, like I've taken lots of L's, but I never let it like discourage me. I always just thought, you know, how am I going to improve on this? And an L to me is not a loss. To me, it's a lesson learned, so that in future I know what to do when when it approaches me. So I think that's my plan. You know, ultimately as well, like, just want to be rich, I guess.
Yeah, no, it's always good. You got to set smart goals, so be specific, measure, and then I forgot what's the SMART goal. Specific,
measurable, actionable,
realistic,
realistic, and timely.
I didn't know that. Thank you.
So literally break it down, what you want to achieve for the year, break it down into the monthly targets, break it down into weekly targets. And then some weeks you might not achieve, but yeah.
Just felt like in my business 101 class.
Yeah. I mean, you know what? University is good. I'm personally, I respect people that go to university and they learn, but at the same time, you've got to apply the knowledge into practical.
Yeah.
And having a mentor is very important.
Yeah.
Because then someone who's achieved what you want to achieve can tell you the steps to take. Do you know what I mean?
I think having a mentor is very, very important. Yeah.
Yeah.
So I think a lot of conversations I've seen on YouTube about these successful people, they've always mentioned that they've had a mentor to guide them.
Yeah.
When you have a mentor, it's like the shortcut to not success, but to building successfully. You know.
Yeah.
That's what I think.
How about you, Manal? What's your plans for 2024? What do you want to achieve?
Work smarter, not harder.
Yeah.
Definitely.
Yeah. that is the key.
Definitely, that's something. And focusing a bit more about those things that I'm really passionate about. So like financial education, like bringing that across to other people.
Yeah.
I don't really know where it's going, becoming a bit more financial independent. I mean, when you went to uni, you'll have student debt. I worked very hard to get mine out of the way by the end of the year, hopefully. So I'll see what's next then.
Nice.
Keep putting money into funds and things like that to track the market for now. When I become more independent, go back into active investing again.
Definitely, yeah.
See how that goes.
Yeah.
What's your plans?
Yeah, exactly.
My plans.
Tell us.
So, my plans are it's always been centered around people around me. So, if people around me can succeed, then I'll succeed. And that's what my plans are. I'm trying to build a community, make sure that the people that are part of Ceniqa are members, whatever they do, whether they're doing the learning side of it or the automated trading, or sometimes I've got people that come up to me looking for opportunities such as, how can I be a part of Ceniqa? How can I work with you? And then as long as people around me succeed, then I know that I succeed. That's how I've always been. I've always centered myself around helping others, because if people around me are successful, then ultimately I'll be successful.
Makes sense.
So yeah, that's my plans. My plans to grow the community. Right now we're on 200 members on the automated trading. I'm trying to build this up to 500 to 1,000. Build individuals to actually head up their own teams as well, like we was discussing the other day, where you could actually be a sub account manager of your own network, and then the people that you manage to take care under you, they're using the system, and then you're actually building yourself a business model as well. So yeah, that's something I'm building for the next year.
That's good.
Yeah.
I think building a network is very important as well.
Yeah.
Especially when you're like, I mean, you said you want to do something for yourself. I eventually would love to do something for myself. I actually really think that so many people out there, you say like you see all those people out there doing their own stuff online, and it's so romanticized. I read another post about it. No one really sees the struggles, and as you both said, like having a support network, be it like your clients, a community that you're building, talking to friends, exchanging ideas, or having like a mentor who will not always tell you what to do in a nice way. I think mentors should also be there to tell you like, look, this is going to be tough. You have to go through it, because nothing is easy, right? Nothing comes just like with that, for most people at least.
Yeah, nice.
I think it's really good.
That's good.
But yeah, I'm excited. 2024, I think it's going to be very, very good.
I am too.
It's going to be a very good year.
I just want to look back and be like, hey, I had this conversation with you, and look where I am today.
Exactly. Yeah. We'll have a follow-up. We'll be like, in 6 months' time, we'll see where you're at. Yeah.
Yeah, definitely.
It's always good to set goals and targets, as long as you're working towards it. If you don't have to achieve it, as long as you're moving forward,